We're going to stay with innovation now. A key area of interest in this regard is considering how the future of artificial intelligence and automation will affect the financial and monetary system. The South African market seems to have been slightly slow in the uptake. For more on this, I'm joined by Mark Lindhiem. He's the head of strategy at Alexander Forbes. Thanks so much for your time on SABC News. Perhaps you can start by painting a picture of where we are in South Africa when it comes to artificial intelligence in the finance sector, and also how easy it is going to be for people to move away from trusting humans to trusting artificial intelligence with their money.
Thanks, Nziga. Look, I think we are somewhat behind some areas of the world where there's a little bit more development, but we're certainly catching up. We are seeing, for instance, the first artificial asset management companies starting up, but I think we've got a long way to go, and it's obviously a broad topic. Specifically is related to people managing other people's money. There's a huge trust factor going on there, and I think that it's still going to be a while until there's a confidence in the replacement of that human relationship with, you know, latest technology. But certainly the benefits of technology for consumers are operating at lower costs, better decision making, and it's something which is coming our way, and it's unavoidable. So existing players, in my view, certainly need to take a look, because I think the disruption to existing businesses and jobs is certainly going to happen, starting to happen already.
Do we have a time frame of about when this is going to be? And if I'm an asset manager sitting at home and watching, is my job safe despite all this disruption that's going to be happening?
Yeah, I think the jobs are safe for now, but there's lots of statistics that we see that show that many of the asset managers who are trying to manage money to add value and beat indexes are not actually delivering the value that the clients demand. There are certain levels of apathy when people have monies invested and, for instance, it's doing okay. But I think more and more transparency in the financial sector, people can see more and more how their money is being managed and what the outcomes are, which means that the buyer is going to become more discerning. And especially if these new propositions using things like machine learning and artificial intelligence come out with better fee propositions, better value for the cost, the consumers are going to start taking more and more notice.
One of the positives of disruptions that you're speaking of is the benefits to clients that you've just spoken about. A negative that can happen when technology and disruptions such as this come in is that people who are already left behind by this digital revolution and technology are going to get even further left behind. If we're talking about the finance sector, do you think that there's a responsibility or need to ensure that people who are already excluded, and we know that the financial sector is not that transformed, are going to be included or somehow dealt with when it comes to this tech revolution?
I think the nice thing about the tech revolution, because it comes with more scale, lower cost, it can include a greater level of the consumers, and therefore more inclusion from that perspective. The finance sector has a level of fairly highly skilled people, and so yes, there may be levels of job disruptions there may be some more training required, but I think for me the bigger picture is that more and more consumers can get access to services which they previously didn't have access to, which is, you know, exciting and facilitated by this advance in technology.
Mark Lindhiem from Alexander Forbes, thanks so much for your time on SABC News.